Expert opinion coming in. It's time to get you the final update on our global market wrap this morning. European markets ended Tuesday's trading session higher, with the French CAC up 60 points, the German DAX up 85 points, and the British FTSE closing 1.5% higher. This even as inflation in the Eurozone region hit a record high of 10.7% in October, way higher than the estimated 10.2%. Meanwhile, the Bank of England saw strong demand from investors at its first auction to sell government bonds worth £750 million from its quantitative easing stockpile. The Bank of England aims to gilts worth £6 billion in 8 auctions in November and December as part of its plan to reduce its bond holdings by £80 billion over 12 months. All right, that's the global market action. Let's get in our researchers who will tell us what will this mean for our own markets as well. We have Vivek, Nigel and Surbi joining us now. Hey guys, a very good morning to all of you. Vivek, coming up to you first. What is the market setup looking like today?
Well, good morning. As you mentioned, all eyes today will be on the outcome of the FOMC meet. Fourth successive 75 basis point hike is what the market is looking at. Most U.S. markets, as you mentioned, ended the day lower on the back of a strong U.S. GDP, strong U.S. jobs data. And again, this is something that actually ensured that the Fed commentary again may not be too conducive as far as equity markets are concerned. European markets ended higher. When you're talking about gold prices again moved up around 0.5%. But the key mover yesterday was actually as far as the oil markets were concerned, you actually saw significant moves there, 2% higher as far as WTI futures were concerned on the back of hopes of China reopening, and also Brent futures also ended up higher by almost 1.9%. Coming closer home, the RBI policy meet outcome, and the commentary there is something that is being tracked very closely as far as market participants are concerned. Key earnings today include Dalmia Bharat, Mahindra and Mahindra Financial, as well as Adani Transmission. When you're talking about the weak or very muted global cues, Asian markets too are following suit. Very muted opening as far as Asian markets are concerned, and SGX Nifty too is indicating a muted and slightly gap down opening for the Indian markets.
Okay, all right. That is what we're expecting in terms of our market moves today. Moving on now, going across to Surbi, who will list out all the stocks to watch out for in today's trading session.
Few stocks that are on my radar today. The first one is Adani Ports, where the revenues have grown 33%. EBITDA has grown 14% on a year-on-year basis. The margins have come in at 56% versus 65% same time last year. Next is Tech Mahindra, where revenues and margins are pretty much in line with estimates. The dollar revenue is up 0.37%. EBITDA margins have come in at 11.4%, and PAT is up nearly 14%. Next is LIC Housing Finance, where the net interest income declines 28% sequentially and the gross NPA is up 1.35%. Cholamandalam Investment, the disbursals are up 10% sequentially and the AUM is up 6%. Lastly, Voltus, where the revenues have come in pretty much in line with the CNBC-TV18 poll. EBITDA is lower than the poll at 71 crores versus a poll of 114 crores, and margins have come in at 4.1%. Few auto names will also be on our radar today because of their October sales numbers. Hego Motor Corp, the total sales are down 17% on a year-on-year basis, and the export sales are down 42% on a year-on-year basis. Eicher Motors, Royal Enfield sales are up 86% on a year-on-year basis, and lastly TVS Motors, where the sales are up 2% on a year-on-year basis.
Okay, all right, that's a long list. Surbi, thanks a lot for joining us with all those details. And finally, let's go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. The FIs, they surprised us when they were selling lock, stock and barrel. And now, in fact, it seems they're showing us the big money. So that's pretty encouraging because yesterday as well, they pumped in money, even if you take into account the large trades that we saw. The indices yesterday, well, the Nifty ended higher, but the India VIX as well perked up a little bit. Remember, we're getting to a big event, so IVs on both the calls as well as on the put side did see a bit of a bump up. But there was long addition yesterday, and that was evident because the premium on the Nifty futures moved to around 65 points from around 40 points odd. And that's perfectly tying up with what the FIs did in the F&O market. Well, in the index futures itself, they added close to 13,000 long contracts in the ratio of 6 longs for 1 short. And now, in fact, the long positioning is at around 66%. But on the option side, you didn't get any direction, whether it was with regard to the buying side or even on the writing side of things, pretty much even Stevens out there. So let's look at the options data a little bit more closely then. The 18,100 put and the 18,000 put, both of them together, they added more than 1 crore shares. And there were signs of writing being seen out there. So that's telling you that the base of the market could have moved up a little bit in the near term to around that 17,900 odd mark, just plugging in the numbers from both those two strikes. But on the upside, the 18,100 call, well, the premium's around 120 rupees or so. My guess is that there is some writing out here. So that 18,300 odd level, 18,250, 18,300 odd, that's where we could see some bit of supply and some bit of resistance that's coming in there. The broadband you have, 17,900 on the downside, 18,300 on the upside. I'll tell you what, ahead of a big event, if you want to take some money off the table, you've made some money on the index trade, well, I think that would be a prudent strategy as well. For starters, SGX Nifty suggesting a mild red tick. Back to you.
A mild red tick, Nigel, Vivek